Just delving into that decision from the MPC, it was largely expected, but some commentary that has come out has been quite lambasting of this decision. They're saying that the Central Bank of Kenya has made a mistake, that they should have had a sharp cut as a result of the fact that we've already seen banks starting to cut their rates. We've already seen those rates coming down, and inflation, of course, we know is sitting at 13.06% year on year. That was for the month of April, far below the 18% mark. So what is your reaction to the commentary we've had from them and the rationale they chose to leave rates on hold at 18%?
Well, yes, I mean, they highlighted two issues, especially with regards to inflation, that inflation was starting to tick up, especially food inflation. And then they also mentioned exchange rate stability. But I think to a certain extent, probably those two are almost being resolved. If you look at exchange rate stability now, we're having import cover of about 4 months. The reserves that we have now are at an almost record high. So the currency as a whole, I think now is starting to come quite under control. Inflation remains a bit of a concern, but really no more on the food side. But I think that's a supply situation. I don't think they'll do much at this point. Otherwise, the rest of the inflation metrics really came very well under control.
Okay, so just reading some of the commentary and looking at what the market is already pricing in. Fred Mweni, chairman of the board of the Traders Association, coming out saying that the market has moved on and the Central Bank of Kenya needs to catch up. And they're expecting that the next cut could be even 10 basis points, and saying that rates are too high. Banks have already started reducing their rates. So why the disconnect between what the market is doing and what the Central Bank of Kenya is doing right now?
Yeah, I think to just give credit to the central bank, they have said they are going to intervene on the interbank market to try and ease pressure in terms of volatility, especially the interbank rate, which should filter through in terms of the interest rates which are charged to consumers. I think the main concern, and really one of the main reasons that probably they didn't really spell it out clearly, is that credit growth in the economy remains quite high. In January, it was at 27% year on year. It's reduced to about 24% year on year as per yesterday's release. But that still remains quite high in terms of credit growth in an economy that is seeking to control inflation. Yeah. We think their target is probably below 20%. So we probably, until we see that figure coming to that level, I think we're probably going to see the rate being held.
As you say, far by any standards, just looking here in South Africa, can get that out. Just looking here in South Africa, we're sitting with single-digit private sector credit extension. And as you say, 24% is what you're sitting at for the month of March. So that demand side pressure is still there. Let's move on to some of the markets and moving news that we've seen. FirstRand of South Africa is possibly eyeing an acquisition in Kenya right now, a mid-sized bank. Any speculation as to which bank this might be?
Well, at the moment, we can't really tell. I mean, there's been some element of consolidation in the Kenyan banking sector, but most of them remain pretty small. And, especially if you start going beyond the first 15 banks, the rest are really small, medium-sized, sort of family-owned banks. But with prudential guidelines coming in and, families looking to divest, and the need to actually raise more capital to become more competitive in the market, I think we are increasingly going to see more larger players coming into the Kenyan market.
What type of chance does FirstRand have against the likes of Equity Bank, KCB, well-established brands, well-established banks from the indigenous banking side of the equation? We've also, of course, got Barclays Kenya. We know that Stanbic has a presence. So what type of chance does FirstRand have to make inroads into the Kenyan economy?
I don't think they're probably going to focus on the retail market. I think that market is really now almost approaching saturation, and sort of the entry barriers there are quite high. I think they'll probably be looking at the investment banking side. I think there's quite a bit of room there in terms of product innovation. And just using Kenya as sort of like a platform to serve like the entire East African region. So I think the investment banking side, trying to link those transactions and maybe doing a bit of high-end banking, sort of what like the stand chart is doing, I think probably there's room there.
And we know, of course, that RMB is within the FirstRand staple, so that would probably be the channel that they would use to tap into the investment banking revenues. Let's move on to the agricultural sector, falling back yesterday by 1/3%, and Lemura Tea really hitting that sector hard. Overall, though, it was a sector that we were very excited about when the shilling was so weak last year. So what are the prospects for the sector right now with the shilling at around 83 against the dollar?
I mean, it's unprecedented. I mean, the currency has strengthened quite significantly since then. So that obviously that takes a bit of wind from the sector in general. But we think commodity prices remain quite buoyant. The weather patterns have remained quite favorable, although, you know, for the tea companies, we've seen a bit of hailstorms which caused damage to crop. But on overall, we expect average performance now for this year. I guess the only thing is to say that on average, the agricultural sector remains generally undervalued compared to the market. So even if they don't perform exceptionally well, they are coming off a very low base.
Yeah, very low PEs we see in that sector. Eric, we'll leave it at that for today. Thank you so much for joining us. Have a great weekend. Eric Musau is a research analyst from Standard Investment Bank.